All right, welcome back, everybody. Joining us right now for an exclusive interview to discuss all things energy and oil is Darren Woods. He's Exxon Mobil's chairman and CEO. And Darren, I want to thank you for being with us this morning.
Good to see you, Becky.
It's good to see you, too. We've been watching so closely what's been happening with oil prices, and we've seen a real rapid rise and then drop off again after what's been happening in the Middle East. Crude oil back at $65 a barrel. But it got up there for a few days, and I just wonder, from your perspective, what you were watching on this, what you think's happening, and how volatile oil prices will continue to be.
Well, I think you've got to start with the context of the global markets prior to the Israeli bombing of Iran. The markets were very well supplied. In fact, there was plenty of spare capacity, and OPEC was bringing additional barrels onto the marketplace. And so prices were generally trending down with that additional supply coming into the marketplace. What we saw right after the initial bombings is the markets reacting to the potential implication of impacting the production and the supply coming from that region, not necessarily what was coming out of Iran. In fact, there was plenty of supply available to offset any barrels that were disrupted and kept out of the market coming from Iran. It was more of a concern around the transportation corridors, the Straits of Hormuz, or other production in the region. As the bombing and the conflict progressed, what became very clear was a concerted effort not to disrupt that global flow of oil and natural gas. And so as a result, the markets have stabilized and prices have come back down, reflecting what I think is a very healthy supply of both gas, natural gas, and oil.
In other words, you think these prices probably stick around these levels for a while?
Yeah, I think, the concern was a broader disruption in the region. Today, I think it looks much less likely that will happen. And so I think stability there. If something was to change, you'd see that impact, just reflecting the critical source of supply coming out of that region of the world.
Did you change any plans when you saw prices spike, or were you just kind of planning contingency plans that you could roll out if need be?
Well, the most immediate reaction that we took with respect to what was happening there is we've got people based in that region, in that area, and so our first priority was to make sure they were safe and that we were taking care of their families and protecting our individuals there, which we took action with that respect. If you look at what we're doing as a business, we're diversified all around the globe, and we have a very significant presence here in the U.S. And in fact, I think one of the advantages that the U.S. saw and the global market saw with respect to this disruption is just the growth in U.S. supply. I think it speaks to the importance of having domestic supply, a broad, diversified supply base around the planet, and the growth there to offset and stabilize potential disruptions in any place on the planet. So our production here in the U.S., we're growing faster than anybody else. We've got a very large production base here, big investments. We were continuing on that basis.
Hey, Darren, we've been talking this morning about the revenge tax, which I didn't even realize was part of the big, beautiful bill that's been working its way through Congress. The Treasury Secretary, Scott Bessent, has asked Congress to take out the revenge tax because he says that they've negotiated with the G7 nations to make sure that American companies aren't being held hostage, basically, for some taxes that the EU was putting in. This was designed to counteract that, and when they got their way with the negotiations, they said, okay, let's take it out. I know you all, the oil industry and the administration, have been working on trying to do some similar activities when it comes to EU climate regulations. Can you tell us a little bit about what's happening and what you've been talking to the Trump administration about?
Sure. And I would say I'd start by just saying it's not an industry-specific issue. This is a broader issue associated with any large company doing business in the EU. And I think, again, the context for this is if you go back, the European politicians have for decades been trying to decarbonize their economy. Unfortunately, been putting policies in place that are more aligned with an ideology rather than the true understanding of the technical issues and the solutions that are available to address the impacts of climate and reduce emissions. We've ended up in Europe with a mishmash of, frankly, impractical regulations with unrealistic ambitions That has slowed economic growth. It has made the businesses operating out of Europe uncompetitive. It has raised the cost of living in Europe. I think policymakers are waking up to that issue. Unfortunately, the response is not to fix and revamp the policies that they put in place that aren't working, but instead try to bring the rest of the world down to their level. And so they've passed legislation last year called the Corporate Sustainability Due Diligence Directive, CSDDD, which basically requires any company selling into Europe to meet EU regulations and try to meet, again, their ambitions with respect to climate that, frankly, is not technically practical. So for a company like Exxon Mobil, any other large company selling into Europe as well, you have to shape policies for your entire operations to meet EU regulations. That says for us here in Texas, we have to make our business here in Texas comply with EU regulations. If we don't do that, they can sue us, and the minimum penalty that they put in place is 5% of our global revenues. So it is a rational piece of policy. It's probably some of the worst legislation I've seen passed anywhere in the world. And so we are advocating to the Trump administration to address this as part of their trade policies. We've talked to Congress about putting in blocking legislation. We're frankly trying to help the Europeans save themselves here.